Hello dear traders and partners of AMarkets. My name is Daria, I'm the financial advisor, and today we're going to discuss the situation in the global financial markets. So let's get started. According to the International Monetary Fund Economic Outlook, the US economy will decline by 8% in 2020 due to the COVID-19 pandemic. At the same time, Canada's GDP is expected to shrink by 8.4%. The coronavirus has hit these economies of both these countries pretty hard, but the Canadian dollar was a little luckier. The currency received support from rising oil prices, which brought risk appetite back in the market, while the US dollar was facing serious demand problems. Besides, there is another great difference between these economies: the magnitude of the coronavirus pandemic. Canada reports a steady from 300 to 400 new cases per day, while the United States is still struggling with the first wave of COVID infections. The measures that Ottawa took to contain the spread of the virus were quite successful. At the same time, the United States cannot boast good results, as the country's death toll has already topped 130,000. Protests that swept the country in late May and early June have contributed to the surge in new cases. The negative dynamics can be also explained by the fact that some of the states lifted quarantine measures and eased restrictions too soon. In addition to a successful fight against novel coronavirus, the Canadian dollar is also bolstered by the oil market, which soared from unprecedented lows to $40 per barrel. Canadian is in demand in the world, so the petroleum industry supports the country's weakened economy during this difficult time. The combination of these two factors will keep supporting the Canadian dollar against the US dollar. Although there is a possibility that the next Bank of Canada monetary policy meeting, scheduled next week, may weaken Canadian dollar. At the beginning of the coronavirus crisis, the Bank of Canada lowered its key interest rate 3 times, bringing it down to 0.25%. Its last meeting, the regulator left the key rate unchanged and announced further large-scale asset purchases until the Canadian economy is back on its feet and inflation reaches 1 to 3% of target. In light of recent events, the Bank of Canada is unlikely to cut its key rate any lower. At the same time, the bank is also unlikely to terminate its asset purchase program, which should put downward pressure on the Canadian dollar. On the other hand, as we have already mentioned, Canadian dollar will keep being supported by the growing oil market, the rise in the global stock market, and the weak US dollar. The US dollar Canadian pair is currently attempting to break through 1.36 to 1.3610 area. Also, the buyers are strong enough to break through this barrier. We doubt that the pair's growth will last long. The solid resistance area 1.3680, 1.37 should stop the bulls. We anticipate the negative scenario for this pair and expect the price to slip into 1.35 area in the coming days and then to go further down to 1.3430 support. So for now, these are the main trading ideas for the upcoming trading session. Thank you for your attention. Subscribe to our channel and we will do our best for you to reach success trading with AMarkets.